Within the Global Equities Fund, we identify long-term structural growth trends to build up a core portfolio of around about 50 stocks on a global base. Therefore, we don't have any link to any benchmark index, so therefore we are completely independent in our stock selection. But with this very long-term structural growth focus, we need some kind of short-term protection. Therefore, we use also an outer layer which helps us to diversify a little bit the risk with a risk overlay. And this risk overlay is based systematically on technical indicators. Here we see that technical indicators are much more helpful compared, for example, to macroeconomic indicators to get a clear view about the underlying trend on the stock markets. Currently, we have the biggest weight in technology and in consumer discretionary. And the reason for that is that we see a lot of structural growth trends within the technology sector based on the digitalization. And this helps us to get a very high conviction in terms of long-term growing investment themes. In consumer discretionary, we see that around about 600 million of new consumers are popping up in the middle class in Asia, and they tend to behave very much focused on brands, on global brands and the luxury space, so therefore we are also invested in that area. We have been hit by this drop in Facebook. We see that the current discussion about more regulation is not a big issue for Facebook. At the end, it will help them to protect the overall business because it's getting harder for new companies to enter this market. And we think that in the long term, the trend to more digital ad spending is still very much in place and strong. So therefore, we use this opportunity to increase our weight in Facebook. Currently, the highest weight is in Shiseido. It's a Japanese company within premium cosmetics, and here we see very strong growth also as a result of this demand out of the Chinese consumers. They tend to be very much focused on higher brands, on premium brands, and therefore Shiseido is very much in focus from this customers. The second biggest company in the moment is Amazon. Amazon, in our view, is still very much supported by their cloud business, which is growing more than 40% year over year. We see also the chance that Amazon is getting more and more support from its marketplace as entrance for consumers to search for new products, and therefore they will also generate much higher ad revenues in the future. And last but not least, as you know, the retail business is still growing high double digit, around about 25% in the moment. So therefore, very strong underlying trends, despite the fact that they use most of their profits to invest in further growth for the future. And the third one is Kering. Kering also linked to our global brands topic. Here we see that the main brand Gucci is still outgrowing peers by far. Kering has recently reported their Q3 results, where we have seen an organic revenue growth number of 27% for the whole group and more than 30% for Gucci. And we think that it's not fair that Kering is still trading on a discount relative to their peers and more or less in line with the overall stock market on a 1 to 2 year time horizon. So therefore, still very much undervalued or underappreciated in our view.